Since mid-June, the S&P 500, Nasdaq and Dow have all rebounded sharply as investors grew more optimistic that the Federal Reserve could maneuver a soft landing. Amid the recent rally, I think most of the investors are wondering if the bull market begins, or is this a bear market rally where the market rises swiftly only to tumble down worse than before? The U.S. stock market had increased for last 3 months. The rally is not only supported by U.S. retail traders, even the quant fund also increasing their bets on U.S. stocks, helping fuel a sharp rally that has added $7 trillion in value to markets. However, from the macro perspective, the inflation is still too high, although the inflation eased slightly in July. The Federal Reserve still continued tightening monetary policy, and the economy might entering a recession. So, how will economy move in this contradiction situation, and what should we do now? In this video, I will share my opinion on current market outlook. We should know what is the reason that caused recent market rally. There are 3 main reasons caused the rally market. First, the market thinks that inflation has peaked and coming down. Second, the market thinks that the economy will be better than expected. Last, investors hope that Fed will loosen monetary policy earlier based on above 2 points. Although there were still other reasons such as capital flows, political factors, and so on. We should focus on these 3 reasons today because these are the core factors. Now, the questions are, these factors actually happening? Or are the investors too blindly optimistic? If these factors happened, will there be any changes in near term? This will decide the trend of next 1 to 2 years. Therefore, it is important to analyze the data behind. The first data we should know is inflation. Recent CPI shows that annual inflation rate in the U.S. slowed more than expected to 8.5% in July of 2022 from an over 40-year high of 9.1% hit in June, and below market forecasts of 8.7%. Compared to the previous month, the CPI was unchanged, after hitting a 17-year high of 1.3% and also below forecasts of 0.2%. The inflation seems reached its peak and coming down based on the CPI report. However, will this trend maintain in next few months? To know the answer, we have to look inside the inflation. The CPI breakdown by few main components, such as shelter, food, commodities, energy, and services. The prices of food, commodities, and energy increased because of one main factors, supply chain pressure. However, the supply chain pressure index dropped from highest 4.32 until 1.84 last month. It shows the pressure of supply chains are getting lower. Besides, the latest Drewry WCI Composite Index of $6,224 per 40-foot container is now 40% below the peak of $10,377 reached in September 2021. From long-term perspective, the stress of supply chain easing is almost certainly. The prices of commodities and energy also came down finally. The GSCI Commodity Index decreased to 3,685 points from its peak 4,294. The FAO Food Price Index declined 8.6% month-over-month to 140.9 points in July 2022, the steepest fall since October 2018. Brent crude futures also fell below $100 finally. The dropped prices of Brent crude oil and food help a lot in curb inflation. So will this prices decreasing trend continue for next 1 to 2 years? From my perspective, the price of food most likely will continue drop. From historical data, the surge of food price normally not able to maintain and will drop in short term. This is because the surge price of food will stimulate the production. Once the production increased, the price of food will drop. So, the price of food will most likely come down in future. However, the drop of Brent crude oil price is because the market expect economy will become bad in near term due to the tightened monetary policy. If the voice of Fed become dovish, it will cause counterproductive to the suppressive inflation and the Brent crude oil will rise again. The good news is Fed still express hawkish in the recent state. For the long term, the commodities and food most likely will become better. The thing we should concern are the prices of shelter and services components still increasing. main reason caused the rise of these sectors is the strong market of employment. The only solution is lower the employment cost, which the Fed was trying to do in last few months by increase interest rate and quantitative tightening. But the results are not manifested yet. However, the effect of interest rate hike and quantitative tightening will slowly appear because it needs some time to digest by market. On the other hand, the economy seems better than expected. Consumer spending in the United States increased to $13,916.87 billion in the second quarter of 2022 from $13,881.11 billion in the first quarter of 2022. Besides, the U.S. unemployment rate decreased to 3.5% in July 2022, the lowest since February 2020, from 3.6% in the previous period. All of these data shows the economy looks better than expected. However, will this situation affect the inflation? Definitely yes. If the employment rate and consumer spending continue to go high, the inflation will inevitably go high. So, to prevent inflation increasing, Fed will continue tighten monetary policy and the economy will come down eventually. Here is the point, will the economy come down too hard until the recession happens? The investors think that the recession will not come due to the good economy data. However, I think we should not be too optimistic because there are too many uncertainty. From the historical data, soft landing is quite impossible and the effect of tightened monetary policy have not shows yet. Last, will Fed loose monetary policy earlier? Now the market expect Fed will continue increase interest rate until next year and will starting to decrease interest rate from mid of 2023. In my opinion, I think that Fed will eventually loosen monetary policy and decrease interest rate. But I did not think it will happen in near term. If Fed loose the monetary policy too early, it will cause the inflation goes high again. So the Fed will only decrease interest rate when they see the inflation in low stage. San Francisco Federal Reserve President Mary Daly said she doesn't see the Fed easing interest rate hikes anytime soon and predicts they'll continue into at least 2023. In conclusion, there are too much uncertainty to say whether the bull market begins or just the bear market rally. But we should pay close attention on inflation because it will decide the monetary policy of the Fed. Inflation will remain sticky if the jobs reports still come in strong. So, I think Fed will crush the stock market and the economy to lower the inflation. However, every dip of the markets is a good chance to buy for good company. Because for long term, you will never lose. If you have other opinions, let's comment below. Please help to like and subscribe.